Welcome to Drill Down Earnings. We have quarterly results from Elastic. I think this is a really important company, one we've looked at in the past. So let's take a look again. This is the business story behind that one stock on the move. And wow, did this stock move? I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. So Elastic Q2 2025 earnings out here. Wall Street looks at a beat or a miss because they don't understand these AI companies like we do. But we're going to dig into that. Beat revenue estimates, really crushed the adjusted EPS estimates. The company lost money, to be sure, but the adjusted number of 39 cents, the company delivered 59 cents. The guidance was pretty good, and the stock roared after these numbers came out. What were the big numbers? So the revenue number of $365 million, that's up 18% on a year-over-year basis. Now, in the last quarter, when this company announced earnings, the numbers were good. And I said so at the time you can go back and look and search in your YouTube or whatever and find what I had to say about this 3 months ago, but the earnings look pretty good. The guidance was confusing, and I think there was a conversation about an interruption in the sales cycle with a new sales approach, and that really worried Wall Street. They ran away from the stock. But in any case, the numbers look kind of like they did last quarter, up 18% on a year-over-year basis. Cloud revenues in particular up 25%. For this company. And the guidance was pretty good for next quarter, which will show 12% year-over-year growth. And they told us full year guidance. So if you got the first 2 quarters are actual and the third year has been guided, and the third quarter has been guided, and then they give you one more quarter, well, yeah, you kind of know what the whole year is going to be. So taking a lot of the mystery out of the stock and suggesting there'll be a 15% year-over-year growth for the entirety of this year if they hit those numbers and Wall Street like this. Now they're nearing profitability too, also on a GAAP basis, and real numbers here, negative 1% operating margin. It's only operating margins, EBIT margins, but that's a good thing. Now, what were the changes in the sales? We'll talk about the products first, but I want to talk about some of the numbers that we can see here. What we saw from the numbers was this company's decided that in the age of AI, and when they're going to have suddenly, they can see into the future that customers are going to be spending a lot more, the big customers, spending a lot more than they used to. And so the game at Elastic for a long time was land and expand, sign up a lot of customers and grow within those customers. The new approach over there is get big customers and focus on big customers. And rather than add to a customer count that will eventually grow, and yes, they still have confidence in the product, find the customers who can really write some big checks. And so they're doing that. And what you see in the numbers, lots of ways to different ways to look at it. One way to look at it is their subscription customers are only up 3% on a year-over-year basis, but the revenues were up 18%. So that shows some expansion here. It also shows maybe that the few new customers they're adding are big customers indeed, because the customer growth, there's no way of arguing it, is stalled. It was 0% on a sequential basis for subscription customers. But if you're going to see nice growth in revenues and no growth in the number of customers, it really shows what they're doing is getting more numbers out of those customers. And if there's any churn, they're churning in newer, bigger customers. So how did the stock react? The market loved this. The stock was up 30% in after hours trading. Although the stock's only after all that, up 44% for the year. What does that tell us? What that tells us is it's been a really bumpy year for Elastic. There've also been some great opportunities to buy the stock, not least of which in September when the stock was at 70, and now it's at 111. So an interesting quarter. Why is this so interesting? This is one of the OG artificial intelligence companies. These guys have been talking about machine learning and AI for a very, very long time. And now their moment has arrived. Their ability to manage data for artificial intelligence, their ability to handle the vectorization of data using the lowest amounts of RAM like nobody else can is a great opportunity for them. And they're starting to benefit from that. All the biggest customers, there was this litany of a list. Wait, is that the same thing? Yeah, that's the same thing. There was a litany of customers mentioned in the call that were just the biggest names in AI, from Microsoft to OpenAI to Anthropic to NVIDIA, right on down the line. All these people using Elastic software. And so what you heard from the CEO Ash Kulkarni, and you're going to hear from the conference call here, was that there is this great opportunity here that has really been enlivened by generative AI to show off what they can do with vectorization and be the company that manages large piles of data for AI. Here's Elastic CEO Ash Kulkarni.
As we look at the market broadly, across pretty much every industry and every vertical, what we see is that there are a lot of processes, business processes that depend upon unstructured data being manually processed and moved from one step of the process to the next step. And all of those have the ability to be automated through generative AI. So we are looking at that, and effectively, our strategy is to be that runtime platform for retrieval augmented generation for anybody building those kinds of generative AI applications. Now, some of those will begin first and foremost by somebody just implementing better search through semantic search, techniques like hybrid search to get the most relevant, precise data for their use cases in their applications. And then they'll evolve from there to building the kinds of chatbots and generative applications that then automate that process. And we just want to be the underlying layer, the underlying platform for all of those things. And so instead of taking a vertical by vertical approach, we're basically taking a platform approach. And as you know, that's been really something that has worked very, very well for us in the past. And our motion around this is very simple. Our field just goes in and talks about semantic search, and the simple question is, how are you thinking about vector databases? What vector database are you using? And it just leads from there naturally to either a semantic search sale or a hybrid search sale or a retrieval augmented generation search kind of opportunity.
So really strong quarter from this company, nice guidance going forward, nothing too bombastic, but showing that this growth is going to continue into next quarter and the quarter beyond. And maybe with some bigger customers, there's some bigger opportunities here. But you take it away, your big Q2 earnings summary on Elastic earnings. Fantastic quarter for this company, another good one. The market hated the last great quarter, loves this great quarter, 18% revenue growth and nearly profitable business, throwing off cash, I should say, operating cash flow and adjusted free cash flow of about $38 million. So they're in really good shape financially. But the one number that tells you a whole lot is 4%. The big customers there, of customers more than $100,000 a year, grew at 4%, while spending by the customers of $10,000 and over was just 1%. It shows you that growing where they can, landing bigger and bigger deals with the customers they've got and the customers they're adding at Elastic. All right, thanks for checking Drill Down Earnings. Subscribe to us on all the channels if you can stand to. We love the company.